Many people invest in the stock market to attain their long-term financial goals since it yields high returns. First-time investors may find investing intimidating. Luckily, the greatest investments for beginners fit a variety of goals, budgets, and comfort levels. We will cover the most common options, but a financial advisor can help you choose the best ones and guide you through your first investments. Start investing and wondering how to make money on your savings? Start with these. If you're worried about investing, open a high-yield savings account. HYSAs provide a greater APY than regular savings accounts, maximizing your return without the danger of investing. SEP Accelerated Savings offers several APYs, however the highest one may not be the best. To choose the best HYSA, carefully read the terms and look for minimum balances or yearly fees. Most U.S. companies provide 401k retirement plans. A 401k will deduct a percentage of your pay as a contribution, either pre-tax or post-tax. Traditional 401k contributions are pre-tax, lowering taxable income while taxing retirement withdrawals. Roth 401k contributions are taxed upfront, so you won't owe taxes when you retire. If you make $50,000 and your employer matches 100% of the first 6% you contribute, your employer will contribute $3,000 per year if you also contribute at least that amount. The 2023 tax year maximum employee contribution is $22,500. Consider these choices if you're self-employed or don't have a 401k. Roth or traditional IRA, SEP IRA, simple IRA, 401k, solo 401k, and short-term CDs. Certificates of deposit have a greater APY than savings accounts. You must pay a penalty to withdraw monies from the account. CDs have maturities between 6 months and 5 years. Longer-term CDs provide larger APYs. Money market accounts, which have higher APYs than typical savings accounts, are another low-risk choice. MMs offer debit cards and check writing, so you can access your money as needed. U.S. Bank offers a competitive money market account with simple debit card or check writing access and a greater APY than a standard savings account for low-risk saving. Consider mutual funds instead of individual funds. This diversifies your investments and prevents overinvestment. Young people invest more in stocks, which are riskier but have larger long-term returns. As you approach retirement, your investment mix will shift to bonds, which are safer and can help ensure a stable income. If you choose a target date mutual fund, you can set your retirement date to switch from equities to bonds as you become older. Index funds invest in a market index instead of a manager. An S&P 500 index fund, which contains 500 of the best-performing U.S. corporations, would buy their stocks. Index funds often have minimum investments. However, some popular brokerage platforms, like J.P. Morgan's self-directed investing, allow you to invest in an index fund without a minimum. Exchange-traded funds, or ETFs, monitor market indexes like the S&P 500. ETFs, like stocks on a stock exchange, are traded throughout the day at varying prices. If done well, investing in individual stocks can be risky but profitable. When a company is young and promising, you can expand your wealth by buying stock. Paper transactions allow first-time stock buyers to experience investing. Paper trades let you practice investing in stocks without risking any money, so you'll feel confident when you invest. Start with low-cost electronic instruments to test the market. Robo-advisors invest your money based on your goals. First-time investors can invest hands-free with this option. Beginners should use robo-advisors because they have cheaper commissions. M1 Finance automates your wealth on its website or app. M1 Finance will automate your strategy based on your goals and financial actions. M1 does not impose monthly fees, but it has a $50 minimum balance cost and charges for print copies of tax forms, statements, and other documents. Selling a stock or ETF incurs regulatory fees, usually a few pennies. Investment apps let you deposit money by arranging periodic transfers or rounding up your debit or credit card. After $5, the app invests in ETFs as a robo-advisor. It's a hands-off way to try investing without a big investment. TradeStation trading platform, known for its powerful trading tools, has no account minimum and no trade fee up to 10,000 shares. Avoid apps and robo-advisors by engaging with a stockbroker at a brokerage business. Live brokers can help you choose the finest investments for your goals, unlike investment websites. They can also help you choose the right investments, track them, and recommend stock purchases and sales. Before employing a brokerage firm, ask about their profit model and fee percentage to estimate costs. Knowing your alternatives is one thing, but how to invest your money is another. Before investing, examine your short and long-term financial goals, risk tolerance, and available funds. Investing for what? Saving for retirement or a big purchase like a house or car? Your goals, short-term or long-term, will guide you. Mutual funds and IRAs can help you maximize long-term gains for a happy retirement. If you want to save for a 2-year vacation, a CD may be better. A certified financial planner can set up a financial plan for your investments. If you pick the wrong stocks, you could lose a lot of money when you start investing. HYSAs, CDs, and MMAs offer guaranteed returns and are low-risk investments. However, these low-risk solutions will make you less money over time than stock market investments. Financial advisors can recommend risk-appropriate investments. Your investment vehicle determines the minimum investment. Some brokerages allow you to invest as little as $10 in stocks. Ask about minimum investment amounts when researching to make sure the choice you choose doesn't demand you to deposit more than you're comfortable with. Always make sure to diversify your investments. If a company's stock price drops, investing all your money in it will lose value quickly. Diversifying your investments with index funds, or ETFs, is a safer long-term bet. Yield Street provides tools and instruction to help novices choose a diversification plan. Rocket Dollar is another great retirement asset diversification program. Even if you know your options, choosing an investment vehicle might be difficult. Consult financial counselors after determining your goals and risk tolerance. Their stock market expertise can assist you with choosing the best investments. That's why you should research your possibilities and choose the ones that will assist you to achieve your financial goals. An expert can advise you, but you must decide based on your comfort level. If you're researching the greatest beginner investments, you probably have numerous questions. Common investing questions can help you make smart financial decisions. Can I make money without stocks? You can make money without investing in stocks. High-yield savings, CDs, and money market accounts are low risk. You may also invest in real estate, a franchise, or gold or silver. Unlike HYSAs, CDs, and MMAs, these alternatives need a large cash commitment before investing. Are there non-financial investments? Non-financial assets may be mentioned while choosing where to invest. Land or real estate are examples of non-stock market assets. Patents and natural resources are other investments. What are the best low-risk investments? The safest investments are not investments. High-yield savings accounts, certificates of deposit, and money market accounts earn more than ordinary savings accounts. However, investing your money will yield a higher return than stashing it. A financial advisor can help you choose the best investment and provide you peace of mind if the market crashes. How are you invested right now? Do you have an emergency fund to prevent cashing out of your investments? Are you just getting started with investing? Leave a comment down below. Take care and remember that your money matters.